Hi, good morning. Warm this addition to the weekly trade intelligence briefing. Just quickly go through the key things that we're seeing at the moment under our trade intelligence hub, and the key things to really prepare you and make sure you're fully aware of what's happening at the moment. It's an unusual place because we're seeing lots of challenges and lots of areas. And what we're going to be covering really this week is US tariffs. Obviously, we're seeing a lot of changes within tariffs and a lot of challenges. Again, this is just the live data we're seeing. We're seeing the Red Sea and shipping reliability. We're going to cover that. Global manufacturing signals. Saudi, we keep touching a bit on Saudi because we have quite a few people from Saudi who join us on YouTube. AI infrastructure, data centers, export opportunities, and market growth. So they're the key things that we're going to be covering this week. And we'll jump straight in. Trade growth slows. So what we're seeing in the market, business based combination of slow industrial growth and increasing policy uncertainty. What I mean by that is, there's challenges everywhere, and it's trying to understand as an exporter or an importer or anything around there, what are the challenges ahead? We're seeing such headwind in the political circle, but we're also seeing the UK trying to align with the EU. Again, lots of uncertainty. Still having problems with documentation. We're seeing a lot more audits. So manufacturing activity is slowing. We're seeing that. Trade policy is very active. And freight networks are a little bit stable at the moment, which is always a nice thing. It's still prices are fluctuating, but it's a little bit more stable. It's very challenging. Did a talk this week with the RH freight, so thanks to Richard Smith for inviting me. And we talked very much on that subject, supply chain, the volatility and how we have to adapt to the market. It's very challenging. We have demand uncertainty, margin pressures, inventory decisions. We have that market diversification, again, looking at opportunities. We see the biggest risk is not the disruption, but the uncertainty and delay in business decisions. So it's making them decisions. It's very difficult in it to make decisions when you're not too sure of the market. And that goes all the way down to a small SME like myself, that them decisions, I'm a business at the end of the day, what am I looking at? Uncertainty is certainly what we're seeing in the marketplace. Quick freight market, we're seeing a trend in, so we had a look at Shanghai, Rotterdam, we've seen an upward trend. We did a Shanghai to Genoa, just as you know, randomly pick out rates just to give you kind of an idea. And this is on ocean freights on 40-foot containers. Shanghai to Genoa, we saw big increases going there, trends upwards. Upwards, Shanghai to Felixstowe. So again, if you're a UK importer, we're seeing a trend, an upward trend. India to Felixstowe, we're seeing more of a amber, so we're seeing that just slightly increasing, but again, fluctuation, we're not seeing a real big trend of upwards and in the red zones where prices are constantly increasing. We're seeing more of a balance there. Jeddah to Felixstowe, again, we're seeing a trend, even though it's slightly up, we're seeing that more as a smoother path. Obviously, the issues within at the moment with the Red Sea and the Strait of Hormuz obviously has its challenges, but we're starting to see a bit of, and again, that'll reduce rates. It'll make the rates competitive. It's a very volatile market. We also look at air freight. So again, air freight routes, we had a look at Shanghai, London. We're seeing an upward trend there. Maybe that's to do with all the challenges with geopolitical areas, and maybe that's why people are using more air freight. Hong Kong, we're seeing Hong Kong into Frankfurt, again, amber, but all the others, China, Europe, India, Europe, we're seeing upward trends. So we're seeing quite a volatile increases there, and it's very hard to monitor that. And so we'll actually just keep you on the key market drivers. We're seeing Red Sea diversions, obviously fuel costs, capacity management, manufacturing demand, freight rates remain below pandemic highs. But the Asia and Europe lanes have moved high during recent weeks as demand capacity management and geopolitical risk continue influencing prices. So again, it's, we're not seeing obviously the challenges of the pandemic, but there's something in the air and it's a challenge. There's a lot of uncertainty. So again, that causes its own issues as we go along. What we see in the UK Trade and Customs Watch indicators, imports are stable, exports mixed. We're seeing some areas where we're seeing some success and then other areas. So it's a little bit mixed, up and down. Customs scrutiny increasing. So unfortunately, there was a lot more customs around, a lot more checking. It's an ideal time for customs to start checking. And what they're checking there is checking documentation, customs, commodity codes, origins, all the key drivers. Again, what we're seeing in opportunities for the UK market, Gulf opportunities with a recent agreement on the GCC agreement. We're seeing some good opportunities and strong demand there. And even for myself, I'm seeing a little bit of a demand in them areas. I've worked in Saudi, as you know, last year, did some training, hoping to get some traction there. But I'm at an age, so it's not too much pressure for me. If it comes off, great. But I know there are opportunities there. So again, speak to us on the opportunities within the Gulf markets. We know it very well, and we're very well connected out there as well. Cost pressure is alleviated again, elevated, should I say? Can't spell or can't say it. Elevated again. What we're seeing, the signals, origin and documentation, evidence, scrutiny, documentation. We're seeing that a lot. So be very careful, checking your documents, making sure you've got clear files, checking your CDS imports, CDS exports, checking everything to make sure it's all correct, checking your PBA, checking your duties and taxes, all these key areas. Remember, direct representations out there. So again, the challenge is more with you as the manufacturer or the seller, or the buyer. So again, be very conscious of that. Again, like I said, Saudi market expansion vision still there. It's a bit mixed because obviously there's a lot of things happening in Gulf, but they're starting to see the opportunities now with, when geopolitics happens, it opens up opportunities, and certainly Saudi are looking at opportunities within different ports. As you can see, the vast size of it, they see some opportunities there. We're seeing export diversification, so new market entry, Gulf, India, Asian, reducing single market dependency. We talk a lot about this, and again, it's a challenge because if you've got a market that is doing very well and it's always been successful, it's very hard then to go to new markets. But again, it's cultural. There's opportunity. If somebody buys from one market, why can't they buy from another country? Again, it's understanding that not all markets pick your products, but most will. But again, it's understanding the customs, the documentation, the legislation, the labeling, all these kind of things that you should be thinking about. Are the route to market easier? Or is it harder? Again, these are the key areas, but we're certainly seeing an uptake in them markets, and there's a lot of talk in the UK about support. Customs intelligence, so where business face the greatest hidden cost or exposure. Origin, again, I can't talk enough about origin. Your origin, are you using UK origin? Is it UK origin? I'm not saying it's not, but just be very clear that you've got clear records to prove that. Customs on your valuation, are you proving that the valuation? Particularly if you're doing cross trade or you're moving to sister companies or anything else, have a look at your valuation and make sure you're checking the valuation of a commercial invoice if you are using that system, which majority of people are doing. Commodity classification, it's always a challenge. It's a big challenge for lots of businesses. Most businesses will assume that the commodity code is right. Again, it doesn't do any harm getting them checked. Supply declarations, I put medium there, but I always think it's high. I don't think people really understand suppliers declarations and particularly with CVAM and all these key areas that are coming in the geopolitics and also in the protection within the EU on the net zero. There's going to be a lot of challenges. So again, getting these things in place. Again, FTA, free trade agreements, are moderate, as we see. And again, it's looking at them opportunities. When you've got a free trade agreement, do you meet that criteria for your importer to receive zero duty? Or if you're an importer, do you see the opportunities there? Again, origin evidence, weak suppliers declarations, great. I see this all the time when I'm doing audits. Customs valuation, it's a bit of a tricky one, that is when we say customs, but not just on the invoice, but it's all the CIF charges involved in that. It's very important to check. I'm pretty confident that a lot of the brokers and a lot of the freight forwarders are getting better at this, but again, it's always worth checking because remember, they're direct representation. Commodity classification, again, it's a challenge because it can have a huge effect that if somebody's paying less duty than they should be, that's a huge effect and could come with fines. If you're an exporter importing, the importer might be, he might then get charges because he's assumed that the commodity code you're using is the correct one. But again, only be using 8 digits for your exports and your 10 for your imports. Again, why this matters, HMRC, G2 recovery, assessments, margin erosion. AI is coming in, it's here, and it only needs the customs authorities to start understanding AI, and they can start to see data that could never be the speed that it can be now with AI. So again, be conscious of that. You might be getting away with certain things now. There'll be a lot more checks going forward, and there'll be a lot more data checks, as we will see. Again, how businesses are using intelligence, as I've just said, which markets are growing, where hidden costs, which customs risks need attention, which suppliers create exposure. What does AI support? So what do we support within that? Intelligence, customs monitoring, supply chain, cost analysis, and predictive decision making. We have an app like everybody else, but we don't sell it on the market. We use it because we know what we're looking for. So we know how you can react. We've got the data visibility. We can predict things better because we understand what it's telling us, the data, particularly in customs and international trade. And it gives you a faster execution because it allows you to make them quicker decisions. We're all guilty of it. We watch, I'm no different. I do things like on websites and nothing happens and blah, blah, blah. You get very frustrated. You don't really understand. You get the data and you start to understand what the data is doing. So again, we've been in AI for over 6 years now, or 7 years, should I say. We've got a good pattern to understand. AI is there to support you, but use the people who can use it. Lots of people selling these apps and, reduce this, reduce that. But actually, in my experience, they don't even know how to sell it or explain it. So how the hell are you going to use it? So they're the key things to think about. What we're seeing in the market opportunities. So we had a look this week. So it's a bit different this week. We're seeing Saudi, as we talk about, strong opportunity. India, industrial expansion, export growth, supply chain diversification, technology. UAE is the regional hub. Vietnam, manufacturing expansion. So again, and Morocco. We come up with Morocco this week, which was quite an interesting one. Again, automotive nearshoring, industrial growth, they use supply chains coming across a lot. Bulgaria, Romania as well. And again, we'll talk about them as we go along. What's our trade intelligence signals or what are worth watching? Manufacturing investment, logistics as an expansion, infrastructure projects, technologies, we're seeing investment, supply chain diversification. Again, growth increases supports investment, infrastructure and industrial developments. That's clear, rather than traditional export destinations alone. It's where the investments start looking at the markets. This is where AI really plays an important role. Our history of trade, so we had our Rome. We did our very first one on the Silk Road. We'll be doing a new one this Sunday. And again, that will be on maybe the UK or maybe we haven't decided yet, but certainly people are enjoying. The Silk Road is a great one to listen to. It really shows you the combination of how things worked 2,000 years ago. We talked about this earlier, to the modern day. It doesn't change a lot, to be honest. Not a lot of changes there. It's just that it evolves. AI is an evolve. It's evolving, and that's what AI is doing, and it's using the tools correctly. Most companies can use AI tools. You shouldn't be frightened of it. It's very important. Again, next 7 days, what we're going to be seeing, US tariffs, so we will keep an eye on that. Red Sea reliability, again, customs enforcement, Saudi, AI structures, currency. We're going to have a look at currency as well next week. Where's the next growth? Which supplies creates greater risk? Where cost increasing? What could affect margins next? So again, that's what we should be thinking. Competitive advantage. Again, that's where you can be competitive in the market. It's very important. So thanks for watching. We'll look forward to seeing you next Wednesday and also on our other podcasts. So again, thanks for joining us. And we look forward to seeing you on future podcasts. Again, drop us a note. Tell us what you think. If there's anything you want us to cover.